Hello my dear CA final students appearing for May 23 exams. As per many students request, I am doing this MCQ marathon, and in this video we are going to cover ICI MCQ questions. So around some 80 questions, 80 MCQs they have given, so that we are going to solve, and these are like the standard ones. See, for MCQs actually there is no hard and fast rule, so you have to prepare the entire subject and the application of that subject only will be the MCQ. So there is no point in solving 1000 or 2000 MCQs also without knowing the subject. So once you have knowledge on the subject, so that will be the sufficient. So this small points like the monetary limits, time limits, the exemptions, so based on that only usually the MCQs will be coined. Okay, fine. So without further delay, let's start with this. So first MCQ here, Aircool Limited, a supplier of air conditioner, is registered under GST in the state of Maharashtra. It has a policy to gift an air conditioner to its employees at the end of the financial year in terms of the employment contract. So anything that is covered under the terms of employment contract is a perquisite. Even we have one latest circular also related to that. It's a perquisite. So when it is a perquisite, it is not a supply. When it is not a supply, what will be the GST liability of Aircool Limited? The answer will be nil. However, if suppose this line is not given in terms of the employment contract, line is not given, so then it will become gift. If it is gift, the value of gift does not exceed 50,000 per annum per employee is not a supply. Here what is the value of the gift per annum per employee? So 52,50,000 excluding GST. Yes. So value of gift less than or equals to 50,000 per annum per employee. So while counting value of gift, so we need to take value is excluding GST. So therefore here we need to take it as excluding GST. So 52,50,000 divided by 150 employees. So therefore that will come to what? 52,50,000 divided by 150 employees will be 35,000. So 35,000 does not exceed 50,000 per annum per employee. So consequently it is not a supply. Even then the answer will be nil only. Okay. So that is with respect to this. Then next one, second, Mr. James Stewart is registered under GST in the state of Maharashtra. He sells footwear to his customers locally within the same state. He has been appointed as an agent by Toto Shoes Limited. So James Stewart is appointed as an agent by Toto Shoes Limited. So Toto Shoes Limited is the principal and James Stewart is the agent. And Toto Shoes is located in Karnataka. During the financial year, Toto Shoes sent taxable goods worth rupees 5 crores from its Bengaluru store to James Stewart, who sells such goods for 5 crore by raising invoice using the GSTIN of Toto Shoes Limited. So agent is raising invoice in the name of agent or in the name of the principal? In the name of the principal. So Mr. James Stewart receives a commission of 60 lakhs. As agent is raising invoice not in his own name but in the name of the principal, this agent is not called as agent acting on behalf of principal. So there is only one supply of goods between the principal and the buyer for 5 crore rupees. And then Mr. James Stewart receives a commission of 60 lakhs. So from Toto Shoes Private Limited during the financial year. So what is the value of supply of Toto Shoes Private Limited? The value of supply of Toto Shoes Private Limited is 5 crores and the commission. So option C is the answer. So for James Stewart only the commission will be there because simple reason, raising invoices using the GSTIN of Toto Shoes principal. What if the agent is raising invoice in his own name? That is, what if in this case James Stewart is raising invoice in the name of James Stewart only, then agent is acting on behalf of principal. So then in that case between principal and agent there will be supply under 71C. Then there are two supplies, one between agent and the buyer. So what value the agent is raising invoice? Depending upon that. That is not given in the question. Depending upon that. So agent, that is given in RTP, latest RTP they have given that question. That is agent raising invoice to the buyer, that value plus agent's commission, plus if the agent is a del creditor agent, the interest also, that will be the value of supply in the hands of the agent. For the principal to agent, the value needs to be determined in terms of rule 29. So open market value or 90% of the resale price at the option of the supplier, that should be taken. Here it is simple, agent not acting on behalf of principal, so only one supply by principal to the buyer, 5 crores, and agent gets commission, that will be included in the value of supply of the agent. Then number 3, which of the following persons can opt for composition scheme under subsection 1 and subsection 2 of section 10 of CGST Act in the state of Delhi? Registered persons whose aggregate turnover in the preceding financial year did not exceed 75 lakhs. So can they opt for composition scheme? So whose aggregate turnover did not exceed, actually 75 lakhs in Delhi. So Delhi, it is 1.5 crores. So 1.5 crores, yes, first case they can opt for composition scheme. Second, registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores, also yes. A person engaged in manufacture of, so manufacture of notified goods. What are those notified goods? Ice cream, edibilized, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. So they cannot opt for composition scheme. A person engaged in manufacture of ice cream, edibilized, etc. No, they cannot opt for composition scheme. A person engaged exclusively in providing restaurant service. Yes, so they can opt for composition scheme. A person engaged exclusively in supply of medicines. Trader also can opt for composition scheme. So 1, 2, 5, 6 is the answer. So option B will be taken as the correct answer. Then state which of the following statement is incorrect. So usually we make a mistake in exam, like, so which of the following statement is correct, which of the following statement is incorrect. So there be careful. So we need to select which of the following statements are incorrect. An agent supplying taxable goods on behalf of the principal, where invoice is issued in the name of the principal, is required to get compulsorily registered under GST. No. So actually this statement is incorrect. So which agent is compulsorily required to get registered? That agent who is acting on behalf of principal. When the agent will be acting on behalf of principal, if it is a sale transaction, invoice is raised by the agent in his name. If it is purchase transaction, the purchase invoice in the name of the agent. Persons who are required to deduct tax under section 51 of CGST Act, whether or not separately registered under CGST Act, are compulsorily required to get registered under GST without any threshold limit. So yes, TDS deductor is compulsorily required to get registered. So this is a correct statement. Every person supplying OIDR services from a place outside India to a registered person in India is compulsorily required to get registered. This is also correct statement, because OIDR supplier located outside India. So to a registered person in India, they are not compulsorily required to get registered. So OIDR supplier located outside India, whenever they are making supply to a non-taxable online recipient, then only compulsorily required to get registered. But in this case, they are making supply to a registered person in India. So which means that registered person in India is not non-taxable online recipient, because who is a non-taxable online recipient? Any unregistered person who is importing services for other than business or commerce. So here registered, so they are not non-taxable online recipient. Other than non-taxable online recipient, taxable under RCM, and this OIDR supplier is not compulsorily required to get registered. So the answer for this is no, incorrect. So person who supplies services other than supplies specified under subsection 5 of section 9 of CGST Act through such e-commerce operator who is required to collect tax at source under section 52 are compulsorily required to get registered. So supply services other than supplies through 9 subsection 5 through e-commerce operator who is required to collect tax at source are compulsorily required to get registered. Actually this is also incorrect statement, because supplier of goods through e-commerce operator only in compulsory required to get registered, but supplier of services or other than that is notified service or other than notified service through e-commerce operator, they are required to get registered only when their aggregate turnover exceeds threshold limit. But the e-commerce operator is compulsorily required to get registered in this case. So therefore here the answer is wrong, incorrect. So what are the incorrect statements? 1, 3 and 4. 1, 3 and 4 are the incorrect statements. And in this context, I wanted to just give you a clarity. So which cases they are not compulsory, like they are compulsorily required to get registered? You need to remember the keyword I creations. So what is that I creations? So I creations, that is interstate supply of taxable goods other than handicrafts. Then C for casual taxable person other than handicrafts. Are recipient liable to pay GST under RCM 9 subsection 3. E-commerce operator who is liable to pay GST under 9(5) are liable to deduct TDS under section 52. So TCS under section 52. A, agent making supply on behalf of principal. So agent acting on behalf of principal. T, TDS deductor. I, input service distributor. O, OIDR supplier located outside India making supply to non-taxable online recipient in India. N, non-resident taxable person. Yes, supplier of goods through e-commerce operator. Okay. Then number 5, Mr. Lal, a registered person under GST, was a proprietor of Messrs. Spice Stand Restaurant. He died and left behind his wife and son on 15th August. His son Mr. Paul wants to continue the business of the deceased father. Now GST consultant of Spicetone gives advice to Paul as to how he can continue the business of his deceased father. Which of the following options is correct? So how he can continue? He need to get a new registration in his name, and so whatever is the ITC that is from the transferor, it will be transferred. So Mr. Paul should apply for new registration under GST in the name of Spicetone Restaurant under his own permanent account number with effect from the date of succession, and file ITZ2 for transfer of ITZ to the new entity. Correct. This is the correct answer. Paul can get the authorized signatory changed. No, that is not possible on account of death of sole proprietor. When the legal representative continues the business, new registration is to be obtained. Mr. Paul should close the old firm and start new business under different name. No, they can continue in the same name but with a new registration. So Mr. Paul should do the business with his mother as the new proprietor, and Paul should act as manager. No, that is also wrong answer. So only option A is the correct answer. In case of death of sole proprietor, so ITZ can be transferred from the old registration to the new registration. For that, the legal representative only in the name of his father will file ITZ2 for transfer of ITZ, and this ITZ2 should be certified by a chartered accountant or cost accountant. If the amount of ITC can be any amount, but if the transfer of business is with specific provision for transfer of liabilities. Okay. Then number 6, Messrs. Raman Plastics is a manufacturer of plastic toys. It is registered under GST in Shimla, Himachal Pradesh. It furnishes the return on monthly basis. It procures its raw material from Punjab. During the month of April 2021, it purchased material of 35 lakhs and paid IGST thereon amounting to 6.3 lakhs. So therefore, Raman Plastics is a manufacturer. It is registered in Himachal Pradesh. So they are procuring material from Punjab, so another state. During the month, it purchased material of 35 lakhs and IGST is paid amounting to 6.3 lakhs. It supplied 30% of its production in the state of Jammu and Kashmir. So therefore, they can take ITZ, no restriction. Whereas 70% of the production was supplied taxable at 1% to a merchant exporter. So in that case, the returns for the month of April were duly filed in time, that is within the due date. The last date up to which the taxpayer can claim refund of ITZ on account of inverted tax structure. So refund of ITZ on account of inverted tax structure can be claimed. So on a monthly basis, so what is the actual date of filing return? So we need to see the actual date of filing return and due date of filing return. So what is the due date of filing return? The returns for the April was filed on time, which is 20th May. So that itself is the due date as well as actual date. So therefore 20th May 2023 will be taken. What if it is actual date is 19th May, 19th May will be taken. So in case of refund of ITC on account of inverted tax structure, the relevant date for computation of refund, that is, we need to make a refund application within 2 years from the relevant date. What should be taken as relevant date? Actual date of filing return or due date of filing return. Sorry, it is due date of filing return. It's not actual date of filing return. In case of deemed exports, it is the actual date of filing return. In case of refund on account of unutilized ITC, it is the due date of filing monthly return. So what is the due date of filing monthly return here? 20th May. So that will be taken. Even if it is given as 19th May actual date, we'll take 20th May only. Then, so 2 years from the relevant date, so 20th May 2021, so 22 and 23. Then next number 7, Jolly Electronics Private Limited, an authorized dealer of GG Micro Limited, is located and registered under GST in Lucknow, Uttar Pradesh. It has sold the following items to Mr. Rakesh: refrigerator, stabilizer, LED, split AC, stabilizer, total value 1,15,000. Jolly Electronics Limited has given a single invoice indicating price of each item separately to Mr. Rakesh. So these goods are not naturally bundled in the ordinary course of business. That's the reason why it is not a composite supply. Okay, will it become mixed supply? Yes, provided there is a single price, but the price is given separately, so which means it is neither composite supply nor mixed supply. Then what it is? Individual supplies taxable at the respective rates. Mr. Rakesh has given a single check, so payment, how it is received, how invoice is raised, that is irrelevant, but whether the values have been shown separately or not is only relevant. So in this case, it will be supply other than composite supply and mixed supply, and we need to take respective rate for each item. Then number 8, Radhika Travels Private Limited purchased a bus chassis from Jyoti Motors Limited for a consideration of 80 lakhs on 1st August. Radhika Travels Private Limited sent the bus chassis for bodybuilding to Messrs Hanuman Fabricators and paid in advance the total consideration of 25 lakhs received by Hanuman Fabricators on 10th August. So, here what is the question? Hanuman Fabricators, after completing the bus body, informed Radhika Travels for inspection of the work done on 1st September. Radhika Travels Private Limited visited the workshop of Hanuman Fabricators on 7th September and confirmed that the bus body was in accordance with the terms of the contract. Hanuman Fabricator raised an invoice of 25 lakhs on 15th September and supplied chassis along with the bus body so constructed along with invoice on 16th September. State the time of supply in this case for the supply made by Hanuman Fabricators out of the choices given below. Now, what should be taken in this case? So, here bus body building, we have a CBIC circular which says that the principal supply should be taken. Whatever is the principal supply in bus body building, there will be two components. One is the material used in the bus body building, second is the fabrication. So, what is the principal supply? Fabrication. So, it should be treated as supply of service. And here if you see, for supply of service which is covered under FCM, we need to check whether invoice is given within the due date or not, because what is the date of completion of service? So, Hanuman Fabricators, after completing the bus body, informed of inspection on 1st September. So, 1st September is the date of completion of service. So, invoice should be issued within 30 days from the date of completion, that is a due date. So, invoice is issued on 15th September. So, we need to take invoice date or payment date, whichever is earlier. If invoice is issued within 30 days, that is within the due date, invoice date or payment date, whichever is earlier. So, therefore, raised an invoice for 25 lakhs on 15th September and supplied the chassis along with the bus along with the invoice on 16th September. So, invoice is dated 15th September. What is the date on which payment is received? 10th August. So, therefore, we need to take 10th August or 15th September, whichever is earlier. So, 10th August will be taken. So, date of invoice or date of payment, whichever is earlier, as invoice is issued within time limit, within the due date. And this is services here, not supply of goods. It will be treated as supply of services. Then, Banke Bihari Pedewala owns a famous sweet shop located and registered under GST in Mathura, Uttar Pradesh. He received an order for 200 kgs of sweets on 2nd May from Gumogam Travels Private Limited, located in the same locality of Madura and registered under GST for a total consideration of 1 lakh. So, he purchased the sweets. Okay. So, owns a famous sweet shop. He received an order for selling sweets from Gumogam Travels. Complete order of the sweets were delivered to Gumogam Travels on 5th May, but without invoice, as accountant of Banke Bihari was on leave on that day. However, the invoice was raised on the same for on 6th May when the accountant joined the office after leave, and payment was made on 7th May. Determine the time of supply of goods. In case of time of supply of goods, section 12 subsection 2, what will be taken as the time of supply? Due date of invoice or actual date of invoice, whichever is earlier. So, what is the actual date of invoice? 6th May. What is the due date of invoice? If supply involves movement of goods at the time of invoice, supply does not involve movement of goods at the time of delivery. So, here delivery was made to Gumogam Travels on 5th May. So, therefore, 5th May is the due date of invoice, 6th May is the actual date of invoice, whichever is earlier will be 5th May. So, due date of invoice or actual date of invoice, whichever is earlier will be taken. Next, number 10, Messrs Doom Furniture Mart, located and registered under GST in the state of Chhattisgarh, sells furniture from its showroom to Messrs Lucky Daba, located and registered under GST in the state of Jharkhand. Messrs Lucky Daba requested to deliver the furniture to Mr. Pyarelal at Patna, Bihar. So, therefore, Doom Furniture Mart is supplier and recipient is Lucky Daba, and that is the billing address, whereas shipping address is Pyarelal, Bihar. So, Doom Furniture Mart sends the furniture with a proper e-way bill to Patna through a transporter who made the delivery to Pyarelal. Determine the place of supply in case of bill to ship to transaction, section 10(1)(b) of IGST Act. What will be taken as the place of supply? So, for the supply between Doom Furniture and Lucky Daba, even though they are delivering the goods to Pyarelal, but we will take billing address. So, as per 10(1)(b), place of supply will be taken as the billing address. What is the billing address? Jharkhand. Okay, Lucky Daba located in Jharkhand, that will be taken. What if it is between Lucky Daba and Pyarelal? What will be taken as per 10(1)(a)? It will be the ending point. So, the ending point will be taken as Bihar. Patna, Bihar will be taken as the place of supply. So, depending upon whatever is the question, accordingly you need to select the answer. Then, number 11. So Messrs. Buildwell Engineering Consultants located and registered under GST in Gurugram, Haryana provided architectural services to Taj India Limited located and registered in Mumbai, Maharashtra for its hotel to be constructed on the land situated in Dubai. So land is in Dubai. Now what is the place of supply with respect to this? Architectural service. Any service in relation to immobile property. Whether we need to check whether we need to apply 12 or 13 of IGST Act. Buildwell is located in Gurugram, Haryana, and Taj India is also located in India. So as both supplier of service and recipient of service is located in India, we need to determine the place of supply as per section 12. In that, is the immobile property located or intended to be located in India? No, outside India. So then we need to take location of recipient as the place of supply. What is the location of recipient? Mumbai, Maharashtra will be taken as the place of supply. What if the recipient is also located in India, but the construction is happening in India? Then the location where the construction is happening, that will be taken as the place of supply. Then what if the recipient is located outside India? Then section 13 will come. Always location where the immobile property is situated or intended to be constructed, that should be taken. Then question number 12. Aflatun Spares Private Limited located and registered under GST in Haryana supplied spare parts to Mr. Lakshmi Kurana, an unregistered person located in Rajasthan. Lakshmi Kurana booked the courier himself with Black Dot Courier Private Limited registered under GST in Delhi for delivery in Rajasthan. Black Dot Courier Limited picked up the goods from Haryana. So starting point is Haryana, handed over by Aflatun Stores and delivered the courier in Rajasthan while passing through the state of Uttar Pradesh. What will be taken as the place of supply? So who is the supplier here? Supplier is Black Dot Courier registered in Delhi. And who is the recipient? Aflatun Spares located in Haryana. So as both supplier and recipient are located in India, so this is place of supply in case of transportation of goods. And B2B or B2C, definitely B2B. So location of recipient will be taken. So in this case, Haryana will be taken as the place of supply. What if the recipient is not registered, B2C? Then we need to take starting point of the goods. So starting point of the goods will be also again Haryana only will be taken as a place of supply. What if the goods are taken from India to outside India? If the goods are taken from India to outside India, let it be B2B or B2C, always ending point will be taken as a place of supply. Then 13, Mr. Javed, an unregistered person residing in Hisar, Haryana, went to Delhi for seeking admission of his child, Mr. Arjun, in CA Intermediate. Mr. Javed got the demand draft generated at ICIDI Bank, located and registered under GST in Hyderabad, Uttar Pradesh, against cash for depositing the registration fee to ICI. Mr. Javed does not have bank account in the bank, and the bank does not have a policy of KYC for customers requiring demand draft and not having account with any of its branch. Determine the place of supply. So in case of banking and other financial services, when it comes to section 12, because both are located in India, bank in India and the recipient is also in India, section 12, we will take general provisions. For section 13 only, we will take, so location of supplier, that too if it is provided to account holders, otherwise we will take general provisions. So as per general provisions, we will take location of recipient. But if you see here, the recipient location is not known in the records of the supplier. So location of supplier will be taken. So where is ICIDI Bank located? In Shahidabad, Uttar Pradesh. So therefore Shahidabad, Uttar Pradesh will be taken as the place of supply in this case. Then which of the following statement is incorrect while issuing a tax invoice? Place of supply in case of interstate supply is not required to be mentioned. No, in case of interstate supply, place of supply should be mentioned. So this statement is incorrect. Then a registered person whose annual turnover is greater than 5 crores in the preceding financial year is not required to mention HSN. No, they have to mandatorily mention if it is greater than 5 crores, 6 digit for B2B as well as B2C. For B2C also they need to, not only for B2B but B2C also 6 digit. So this statement is also incorrect. Quantity is not required to be mentioned in case of goods when goods are sold on as is where is basis. No, quantity needs to be mentioned. Quantity needs to be mentioned. And fourth one, description of goods is not required. No, description is required. So in case of mixed supply also description is required. We need to take the highest rate. That highest rate description will be taken on the as the description of entire supply. So all these statements are incorrect. So option C will be taken as the answer. Then 15. What will be the rate of tax and nature of supply of service if the same is not determinable at the time of receipt of advance? So when we don't know the rate, we need to take it as 18%, and that is in case of advance. And when we don't know what is the nature of supply, we need to treat it as interstate supply. This is in case of advances. So for 15, option C. Then 16, in which of the following cases compounding of offence is not allowed under section 138? Not allowed under section 138. A person who has been allowed to compound once in respect of certain offences. Yes. So already once if they have compounded with respect to certain offences, subsequent compounding not possible, like invoice default, ITC default, collected amount as tax not paid within 3 months, books of accounts default, like that. So therefore this statement is correct. One is correct only. Then next, a person who has been convicted for an offence. Convicted means what? Imprisonment order already passed. Compounding is not possible. A person who has been accused of committing an offence under GST law, which is also an offence under any other law for the time being in force, even then compounding is not possible. So these 3 cases, compounding is not possible. For which of the following acts done by a taxable person, inspection can be ordered under GST law? Suppression of any transaction, suppression of stock, contravention of any provision with an intent to evade tax. So for 17, again option D, all these cases. So inspection can be ordered under section 67. So as per section 67, inspection can be ordered. As per section 71, access to business premises. Access to business premises do not require any kind of suppression, etc. and all. But for inspection, yes, it is required. So either suppression of books of accounts or like stock or contravention of any provision. So then they can order for inspection under section 67. So this is section 67. Then question number 18, Mohandas, a registered person, has supplied goods to Karamchand under his own invoice on behalf of his principal Krishnadev. Which of the following statement is correct? Means here Mohandas is acting on behalf of principal because he is raising invoice in his name. Mohandas shall be jointly and severally liable. Krishnadev shall be jointly and severally liable. In case of an agent acting on behalf of principal, for the GST dues, both principal and agent are jointly and severally liable. So option C, both principal, that is Krishnadev, and agent Mohandas jointly and severally liable with respect to GST dues. 19, which of the following activities are not exempt from GST? Not exempt from GST. Religious pilgrimage organized by THARUN'S Charitable Trust. See, religious pilgrimage organized only by specified organization will be exempted. So therefore, in this case, so this is not exempted. So it will be taxable. Only religious pilgrimage organized by specified organization by government, then only it is. So nowhere it is given that THARUN'S Charitable Trust is a specified organization. Service provided by business facilitator to an insurance company in an urban area. Urban area will be taxable. Rural area is only exempted. Milling of paddy to rice. Milling of paddy to rice is taxable. So the answer is D, all 3 will be taxable because rice is not an agricultural produce and job work in relation to rice, milling of paddy into rice is not coming under exemption. Any service in relation to agriculture, agricultural produce. Then 20, which of the following statements are true? Services provided by government ITIs to individual trainees are exempt from GST. Yes, government ITI or ITC, Industrial Training Institute or Industrial Training Center, so that is exempted. So this given statement is true. Service provided by state governments and private service providers by way of transportation of patient in ambulance are exempt. True. So transportation of patient in ambulance is always exempted. Service of renting of medical shops in a hospital are exempt from GST. No, false. So renting of premises by the hospital is not healthcare services and that will be taxable. Service provided by police to PSUs are taxable. False. Police to PSU are not always taxable because here what we need to understand is that, no, 1 second. So because this statement is vague, so the PSUs, it is given as PSUs, not government department. If it is government department, it will come under interdepartmental service. So they gave PSUs, which means PSU is not government department, police is a government department, so are taxable. So that will be true. So 1, 2 and 4. 1, 2 and 4, option A will be the correct answer. Then, which of the following transactions does not qualify as supply under GST law? disposal of car without consideration and supplier has not claimed input tax credit on such car, it is not a supply. It is not a supply because disposal of business asset without consideration on which ITC is availed is only supply. Here ITC not availed, so not a supply. Then next, a principal makes supply to his agent who is also registered under GST and is situated within the same state. So situated in the same state, an invoice for further supply is issued by agent in his name. Principal making supply to his agent who is registered. Agent acting on behalf of principal, so that will become supply under section 71C. Then next, head office makes supply of service to its own branch, other state, distinct persons. Supply under section 71C. A person imports service without consideration for the purpose of his business from his elder son living in outside India without consideration. 71C. Why? Son, whether or not dependent, will always be treated as related. Import of service from a related person without consideration in the course or furtherance of business becomes supply. So only option A is the answer. 22. Paliwal Associates, a firm of chartered accountants registered under GST located in Jaipur, Rajasthan, is providing professional consultancy services to its various clients. It has taken consultancy services for its Jaipur business from another establishment of the firm located in UK. However, no consideration was charged on the same. So, import of services without consideration from a related person or other establishment located outside India in the course or furtherance of business. So, that will become supply. Okay. Such service would have been taxable at 18% had the same been received from a local firm. Further, Paliwal Associates would have paid 4 lakhs had it not received the said service from its UK establishment. So, in case of import of service from a related person or other establishment located outside India, so it will be coming under supply under 71C, and in case of related party transaction or transaction between distinct persons, we need to determine the value as per rule 28. As per rule 28, we need to take open market value. So, what is the open market value? 4 lakhs and 18%. So, 4 lakhs into 18%, that will be 72,000. 4 lakhs into 18%, 72,000. 72,000 of IGST we need to pay. So, that is the answer. First of all, it is supply under section 71C and it is distinct person. Establishment in India and establishment of the person located outside India are distinct persons. So, therefore, distinct person rule 28, open market value will be taken in this case. Okay. So, then in which of the following supply of goods and services made exclusively to government departments, agencies, etc. and persons notified under section 51, TDS is required to be deducted? Which of the cases TDS is required to be deducted is what they are asking. So, the amount given below are inclusive of GST at 18% wherever applicable. Assume that all other conditions are fulfilled. Health department executed a contract with a local supplier registered under GST to supply medical grade oxygen of 2.6 lakhs. So, 2.6 lakhs inclusive of GST 18%, excluding GST we need to see, because if the value of supply under the contract exceeds 2,50,000, then only TDS is applicable. So, 2,60,000 into 100 divided by 118. So, what is that? 2,20,000. So, as it does not exceed 2,50,000, so TDS not applicable. TDS not applicable here. Then second, government school is making payment of 3.5 lakhs to a registered supplier for making cooked food as midday meal scheme. See, supply of catering services to school is actually exempted. Category 1 education institution, catering, security and housekeeping, transportation. So, therefore, it is exempted. So, TDS is not applicable. TDS is applicable only if it is taxable. So, here also TDS is not applicable. Then Municipal Corporation of Kolkata purchased a heavy generator from a registered supplier in Delhi. Now, it is making payment of 5 lakhs for such purchase. So, yes, 5 lakhs value exceeds 2,50,000 and there is one restriction. If it is an intra-state supply and place of supply and location of recipient is in different states, then TDS is not applicable. In this case, what is the location of supplier? Supplier is located, who is the supplier here? Okay, nothing is given. So, registered supplier in Delhi. Municipal Corporation of Kolkata purchased a heavy generator from registered supplier in Delhi. So, location of supplier Delhi, place of supply ending point will be Kolkata, interstate supply chargeable to IGST. So, TDS applicable. TDS applicable. Then Finance Department of Delhi is making payment of 3 lakhs. 3 lakhs. So excluding GST, if you see, definitely more than 2,50,000. So a registered supplier of printing and stationery, Delhi. Location of supplier, Delhi. Location of recipient, Delhi. For printing and stationery services, general provision, location of recipient. So location of recipient and place of supply both in Delhi. Therefore, TDS is applicable. So the answer is option D. So only in cases 3 and 4, so TDS will be applicable. Then next, state which of the following statements are true or false. Any person aggrieved by any decision or order passed by an adjudicating authority may appeal to such appellate authority within 3 months from the due date, from the date on which the said order is communicated to him. True. True. And there is a condonation of delay by 1 month, 3 plus 1. So if I want to go for a first appeal, the time limit is 3 months plus 1 month. So the given statement is true. No appeal shall be filed to appellate authority unless the appellant has paid sum equal to 25% of the remaining amount of tax in dispute. No, 10% of the tax in dispute. The 25% is applicable only in case of penalty order under section 129. So therefore this statement is false. Adjournment of appeal shall not be granted more than 3 times to a party during hearing of the appeal. True. So maximum 3 adjournments. The appellate authority shall have power to refer back the case to adjudicating authority. No, appellate authority is not having the power. It is only the appellate tribunal which is having the power. Appellate tribunal can refer the matter back for adjudication, fresh adjudication, but appellate authority cannot do so. So this statement is false. So therefore true, false and true, false. That will be taken as the answer, option C. Which of the following is or are not considered as supply under CGST Act? Importation of architectural service for 1 lakh for construction of residential property used for personal purpose from unrelated person. Supply under 7(1)(b). Import of service for a consideration whether or not in the course or furtherance of business. Importation of architectural services free of cost without consideration of office from a related person. 7(1)(c). Import of services without consideration from a related person in the course or furtherance of business. Then C, importation of architectural service free of cost for construction of office used for business purpose from unrelated person. It is not a supply. Why it is not a supply? Whenever there is no consideration, we need to refer to 7(1)(c). In 7(1)(c), import of service should be from a related person or another establishment located outside India. So here it is unrelated person, that's why it is not a supply. That is the answer for 25. Then 26, which of the following is not a supply under the CGST Act? Goods supplied free of cost by X and Sons to its agent for further supply to a customer at 5,000, for which invoice will be issued by agent in his own name. Agent is acting on behalf of principal. When agent is acting on behalf of principal, so principal to agent will become supply under 7(1)(c). Then importation of accounting services free of cost without consideration for business purpose from dependent father. Dependent father is family. So therefore that will become supply under 7(1)(c). Import of service from a related person in the course or furtherance of business. An expensive watch gifted to an employee for 50,000, no other gifts are provided. So the gifted value does not exceed 50,000. That's why it is not a supply. Then a machinery disposed of free of cost means without consideration on which ITC has been availed. So that will become supply under 7(1)(c). So option C is the correct answer. Then GST compliance rating shall be assigned to. Actually this GST compliance rating is not effective at present, but it is there in study material. Only to a person who is liable to deduct TDS, TCS, composition dealer, input service distributor, or every registered person. Actually GST compliance rating shall be assigned to every registered person. At present, practically it is not effective at present, but theoretically every registered person. Then 28, where the National Anti-Profiting Authority determines a registered person has not passed on the benefit of input tax credit to the recipient by way of commensurate reduction in price, the authority may order all 3: reduction in prices, cancellation of registration, or imposition of penalty. All these 3 can be imposed by anti-profiteering authority. Then 29, Sukanya, a supplier registered under GST, failed to pay GST amounting to 5,000 rupees for the month of January. The proper officer imposed a penalty on Sukanya for failure to pay tax. Sukanya believes that it's a minor breach. What is called as a minor breach? If it is less than 5,000 only, minor breach. So but here it is exactly 5,000, that is not a minor breach, and in accordance with the provisions of section 126, no penalty is imposable for minor breach of tax regulation. In this regard, which of the following statement is true? Penalty is leviable since the breach is considered as minor breach only if the tax is less than 5,000. This is the correct answer. Penalty is leviable since the breach is considered as minor breach if the amount is less than 2,500. Wrong. And penalty not leviable since the breach considered as minor breach if the tax involved is up to 5,000. No, it is less than 5,000. Penalty is leviable on Sukanya since the breach is considered as minor breach only if the tax is nil. No, that is also wrong. So only option A is the correct answer. Then which of the following statement is false? ITC on works contract service availed by a software company for construction office is blocked. True. Suppose if it is charged to P&L, ITC is available. Otherwise, so it is blocked. Capitalized ITC is blocked. ITC on works contract service availed by a manufacturing company for construction of pipelines to be laid outside its factory is blocked credit. So yes, pipelines laid outside the factory is not covered under plant and machinery. So it's a blocked ITC, that is true. Then ITC on goods and services used by an automobile company for construction of a foundation on which a machinery to be mounted permanently is allowed. Yes, true. So generally construction services or any service received for construction of immobile property or works contract service goods purchased are blocked credit. However, if that construction of immobile property is plant and machinery other than telecommunication towers or pipeline laid outside factory, ITC available. ITC on works contract service available by a consulting firm for repair of its office building is blocked provided the company has booked such expenditure in P&L. No, false. So it is actually eligible for ITC because if the company has booked such expenditure in P&L, ITC is available in that case. Okay. So therefore option D is the wrong answer. 30, it is D. Then 31, Sukimal, a sole proprietor, has to appear before the appellate authority. He decides to appear through an authorized representative. Which of the following persons can be appointed as authorized representative of Sukimal under GST law? So Sohan, his son, who has been dismissed from a government service lately, no, they cannot act as an authorized representative. Government who has been dismissed from government service cannot act as authorized representative. Rohan, a company secretary who has been adjudged as an insolvent, no, a person who is adjudged as an insolvent also cannot be acting as authorized representative. Mukul, a practicing high court advocate, yes, they can practice as authorized representative. So only 3 is the answer. Under which of the following situations input tax credit will be available under GST law? Cars purchased by a manufacturing company for official use of its employees. Car is a motor vehicle that has a capacity not more than 13 passengers and here it is not covered under exceptions. Therefore, ITC not available. Aircraft purchased by a manufacturing company for official use of its CEO. Aircraft not covered under exceptions. It's a blocked credit. Aircraft and vessels, ITC not available. General insurance taken on car used by employees of a manufacturing company. If car is taken on rent, can they take ITC? No. So if car is purchased, they can take ITC. Already we saw in the first point. So the insurance service with respect to that car also not eligible for ITC. Maintenance and repair service available by a company for a truck used for transporting finished goods. When they buy a truck, they can take ITC. With respect to the truck, repair and maintenance, insurance services, authorized service center service, hiring, renting and leasing of the truck, ITC available. So option D is the answer. Then under GST law, time limit for issuance of show cause notice in case of non-payment of tax on account of reasons other than fraud. Other than fraud, willful misstatement means section 73. For section 73, what is the time limit within which order should be passed? 3 years from the due date of furnishing annual return and notice to be given at least 3 months before. So it here 3 years from the due date of filing annual return is for order, not for the notice. So it is wrong. 2 years 9 months, yes. So 3 years minus 3 months is 2 years 9 months. So option A is the answer. So 4 years and 5 years will come only in case of 74. Here it is 73. Then 34. Time limit for issuance of show cause notice under GST law in case of any amount collected as tax. Any amount collected as tax but not paid. So actually section 76. As per section 76, there is no time limit to issue a notice. So a notice can be issued anytime after 10 years, 20 years also. But after issuing the notice, the order should be passed within 1 year. So in this case, no time limit is prescribed. Then 35. Devbhoomi Rice Private Limited, a registered person under GST is providing services of processing of milling of paddy into rice, loading and unloading package, storage and warehousing of rice in the state of Chhattisgarh. Loading and unloading of rice exempted. Packing and warehousing of rice exempted. but processing services, job work in relation to milling of paddy to rice will be taxable. So determine the amount of GST payable. So 1 crore into 5%, that is 5 lakhs will be taken as the answer. Then 36, a municipal corporation has invited online bids for maintenance of bus stops for a period of 1 year from 1st January to 31st December. The work involves composite supply of goods and services, wherein supply of service is principal supply. The value of goods constitutes 25% of the total. So, if the value of goods does not exceed 25% of the total value, then the services provided to government in respect of an activity entrusted to them under constitution is exempted. Okay. Mr. Kumar, Managing Director of Kiladi Contractors Private Limited, located and registered under GST, wants to bid for the same. And so he seeks your opinion to determine the tax liability. Actually, it is exempted. Option C, exempted. Suppose if it is pure service, also exempted. If it is composite supply of goods and service where the value of goods does not exceed 25% of the total, also exempted. If it is composite supply of goods and services where the value of goods exceeds 25% of the total, then it will be taxable. Then 37, Mr. Happy Singh is a resident of Chandigarh. And one more point for 36, actually this exemption is applicable only if the service is provided to government, not to government authority or government entity. So here it is provided to municipal corporation. Municipal corporation is government. Government means central government, state government, local authority. If it is instead of given as municipal corporation, if it is given as urban development authority, means the exemption is not available, it will become taxable. Then 37, Mr. Happy Singh is a resident of Chandigarh. The marriage of his daughter Kushi Kaur has been finalized with Lovely Singh, an NRI settled in London. The marriage is scheduled on 14 February in Chandigarh. Mr. Happy Singh wants to send 5,000 marriage invitation card to all his relatives and friends in India to attend the marriage. He has to send the invitation by speed post. He is not sure about the taxability of speed post services. At present, what are the department of post which is exempted? Postcard, inland letter and book post or registered post with envelopes less than 10 grams. So that is only exempted. All other cases of department of post will be taxable and it will be covered under FCM. So in this case, GST will be payable. So 37 option A. 38. Mr. Kumar is Managing Director of Kiladi Equipments Private Limited. The company is located and registered under GST in Mumbai, Maharashtra. They have decided to send food grains and other relief materials worth 50 lakhs and 20 lakhs through railways and airways respectively to cyclone hit victims in Kerala. And the company has contracted Super Airlines and Indian Railways to transport the materials from Mumbai to Kerala, and price for the same has been determined as 10 lakhs by air and 50,000 by railways. So in case of transportation of goods, so notified goods by railways is exempted. What are those notified goods? Agricultural produce, food grains, then organic manure, newspaper and magazines, relief material for natural and man-made disasters, then defense and military equipments. But for airways, we don't have that exemption. So the airways is 10 lakhs. So the 10 lakhs will be taxable and the rate of GST is 18%. So 10 lakhs into 18%, 1,80,000. But this 50,000 will be exempted. So the answer is A. So that is Super Airlines, it will be 1,80,000 and Indian Railways, it will be nil. Then next 39. Mr. Manjot is a trader supplying goods from his firm, Mr. Singh Traders. The office of the firm is located in Delhi, whereas its godowns are located in the state of Uttar Pradesh, Punjab and Jammu and Kashmir. UP, Punjab, Jammu and Kashmir. Mr. Singh Traders made the following intrastate supplies from different states during the current financial year. Delhi taxable supplies 21 lakhs, Punjab exempted supplies 6 lakhs, Uttar Pradesh taxable and exempted supplies 3 lakhs each respectively. Jammu and Kashmir taxable and exempted supplies 8 lakhs and 3 lakhs respectively. Okay. Ascertain the states in which Manjot is required to take registration. So they are doing business in multiple states, and whether one of the state is a special category state. No. So we don't have special category state in this. MMTN, Manipur, Mizoram, Tripura, Nagaland. It is not there. Okay. Then one of the state is in U stamp, Uttarakhand, Sikkim, then Telangana, Arunachal Pradesh, Meghalaya and Pondicherry, no. So therefore, are they engaged exclusively in supply of goods? Yes. So therefore, the applicable threshold limit will be 40 lakhs. The applicable threshold limit in this case will be 40 lakhs. And what is the total? 21 lakhs plus 6 lakhs plus 3 lakhs plus 8 lakhs plus 3 lakhs, that is 41 lakhs. It exceeds 40 lakhs. So they are liable to get registered. So applicable threshold limit, applicable threshold is 40 lakhs. and in this case aggregate turnover is 41 lakhs, it exceeds. And where they need to register? They need to register in each state from where they make taxable supplies. In Delhi they are required to register, not in Punjab. Uttar Pradesh also they need to register, Jammu and Kashmir also. So the answer is Delhi, Uttar Pradesh and Jammu and Kashmir. Option B will be taken as the answer then. And in Punjab, when they need to register, as and when they start making taxable supplies, they need to register in Punjab. Then 40, Mr. Pandey is an ambulance driver who lives in NCT of Delhi. He provides driving services to Preeti Heart and Lung Institute, a super specialty hospital registered under GST in Delhi for a consideration of 25,000 per month. Mr. Pandey was instructed to pick up a patient in Gurugram to PHLI. While going from Delhi to Gurugram, he picked 5 passengers for transportation ambulance. See, only transportation of patient in ambulance is exempted, but transportation of passengers in an ambulance will be taxable. So therefore, it is a taxable supply. Okay. Then next one, Messrs. Kala and Associates dealing in sale or purchase of used or second-hand cars is registered under GST. During the current financial year, it affected following intra-state transactions. So, in case of cars like second-hand dealer, so there is a margin scheme. What is a margin scheme? GST is payable on sale price minus purchase price. However, they should not have avail ITC. If they avail ITC, they need to pay GST on the full sale value. So, if you see here, Kala Associates purchased car 1, car 2, car 3 from unregistered person and car 4 from a registered person who charged a GST of 1,30,000 and accordingly Kala and Associates had availed the input tax credit of the same. Kala and Associates is not conversant with the GST provisions, hence it approached you for determining GST liability. Car 1 they can go for margin scheme, car 2 also margin scheme and car 3 also margin scheme, but car 4 regular. So they need to go for regular scheme. Okay. So now with respect to car 1, car 2 and car 3, what is the difference? So 7,50,000 minus 5 lakhs, 2,50,000. 2,75,000 minus 3 lakhs, ignore negative, so no value. 6,50,000 minus 6 lakhs, 50,000. Here regular means entire sale value should be taken, so 9,50,000. So what will be taken as the total? 2,50,000 plus 50,000 plus 9,50,000, that will be 12,50,000. 12,50,000 and what is the rate of GST into 18%? So that will be 2,25,000. 2,25,000 minus with respect to car 4 as it is under regular, they can take ITC of 1,30,000. So 2,25,000 minus 1,35,000, 95,000 will be taken as the answer. Option A is the answer. That's the answer for 41. 42. Messrs. Vishnu Megamart, a store located and registered under GST in Rajasthan, has come out with a big discount offer at the time of Diwali on various gift items. In order to attract more customers, it has decided to supply a gift pack containing 5 packets of THARUN'S namkeen taxable at 12, 1 packet of roasted almonds taxable at 18, 1 packet of chocolate taxable at 28 and 1 bottle of fresh juice taxable at 18 in a single container for a single price. So it is not a composite supply because these goods are capable of being sold separately. So therefore it is not naturally bundled, it is not a composite supply. As there is a single price, it is a mixed supply. So composite supply are wrong, mixed supply, and we need to take highest rate, not the principal item. So highest rate is what in this? In this the highest rate is 28%. So option D will be taken as the answer. Then 43, state which of the following statement is incorrect. Services by an artist by way of performance in folk or classical art form of music, dance or theatre as a brand ambassador, if the consideration charged for such performance is not more than 1,50,000 is exempted. No, if they are acting as a brand ambassador, so this will be taxable. So the given statement is incorrect. Then service of life insurance services under micro life insurance. So where the minimum amount, no, maximum amount, it is not minimum amount, maximum amount should be 2 lakhs, then only it is exempted. So this is also wrong, incorrect statement. Service by acquiring bank to any person in relation to settlement of an amount up to 2,000, not 2,500, this is wrong. So all these 3 are wrong cases. First case, they should not be acting as brand ambassador, then only exempted. Second case, that is a maximum amount, so 2 lakhs. Third case, so up to 2,000 rupees, it is not 2,500. Then 44, ASC, a registered person under GST, supplied goods amounting to 1,80,000 to BSC, a registered person under GST on 30th September. BSC further sold such goods to Rakesh, a consumer who came to his shop on 30th October in cash for 2,36,000. ASC issued a credit note of 11,800 for the rate difference on 2nd November to BSC. Thereafter, BSE entered the credit note in its books for the same in the name of Rakesh without intimating him and providing any refund of the sum paid on 2nd November and reduced its output tax liability. As per the provisions of GST law, which of the above mentioned suppliers are allowed to reduce output tax liability? See, if we give credit note and we have to refund that amount to the recipient, and then only we will be able to reduce the liability. So, just because of credit note, we cannot reduce our liability. Here, ASC is issuing a credit note, okay, for that amount. So, to BSE, and BSE has entered the credit note in its book accounts and they reverse the ITC. But Rakesh, they did not inform. When they did not inform the Rakesh, means they are not giving refund. So, only ASC can reduce the liability, BSE cannot reduce the liability in this case. Then 45, Mr. Alauddin, a stationery retailer located and registered under GST in Allahabad, has received order for supply of goods worth rupees 2 lakhs on 12 November from another local dealer, Mr. Jalaluddin. Goods were supplied under the cover of tax invoice. Alauddin incurred the following additional expenses before the goods were delivered to Jalaluddin: packing charges, freight and handling charges. Jalaluddin made full payment including additional amounts on delivery of goods, for which he was allowed an instant cash discount of 2000 rupees. So, is this discount before supply or after supply? This discount is given before supply. The applicable rate of tax on the goods are IGST 18, CGST 9, SGST 9. So, where Alauddin is located? Allahabad. And where they are making supplies? So, to local registered dealers. So, it is an intra-state supply. What is the value of supply? 2 lakhs plus packing charges 3000 plus 2500 plus 1500 minus 2000 is the discount. So, on that 2,05,000, Mr. Alauddin paid CGST 18 and SGST 18 as a tax consultant determined the further tax liability. So, 2,05,000 into what is the rate of GST? 9%. That will be 18,000. 1 second. So, Jalaluddin made full payment on delivery of the goods, for which he was allowed an instant cash discount. Means invoice already prepared na. So, as invoice is already prepared, so what we need to do, this 2000 we should not reduce. So, 2,07,000 into 9%, 2,07,000 into 9%. See, first 2,07,000, because invoice is for 2,07,000 into 9%, that is 18,630. So, already 18,000 is collected, so further liability 630. Suppose if the discount is given at the time of preparing invoice itself, then we will reduce at 2,000 rupees. And so, here for this 2,000 rupees, what that Alauddin should do, he should give a credit note, so that his future liability will come down. So, for 45 the answer is A, not B. Then 46, Shah BD Company Private Limited is a manufacturer of cigarettes. It has been registered under GST in the state of West Bengal. The turnover of the company for the current financial year is 90 lakhs. The excise duty paid on the cigarettes removed is 10 lakhs. CGST, SGST paid on cigarettes is 18 lakhs each, which was charged separately in invoice. The company also recovered actual freight of 5 lakhs from the buyer on supply of cigarettes so made during the current financial year. Also charged CGST, SGST thereon. The company paid tax 5% under RCM while availing the service of GTA of 5 lakhs. Compute the aggregate turnover of Shah BD Company Private Limited, assuming that the amounts given above are exclusive of GST. So, what should be taken? Turnover 90 lakhs. 90 lakhs should be taken. Excise duty? No. So, whether excise duty should be added? Yes, because CGST, SGST only should not be taken. So, excise duty paid on the cigarettes removed is 10 lakhs. That should be taken into aggregate turnover. So, 90 plus 10, 100 lakhs. And thereafter, recovered an actual freight of 5 lakhs. Okay. So, therefore, that 5 lakhs also will be taken, and inward supply under RCM will not be taken in aggregate turnover. CGST, SGST will not be taken in aggregate turnover. So, therefore, 90 plus 10, 100 plus 5, 105 lakhs. So, option D will be taken as the answer. Then, Mr. Chamcham, registered under GST in Delhi, is a domestic trader as also an exporter of wholesale goods. His annual turnover and input tax details are as follows. So, taxable goods, exempted goods, exported goods. Now, no GST payable on exempted and export goods. Mr. Chamcham seeks your expert in calculating the amount of ITC which he is eligible to claim under GST law. ITC that he can claim. So, in case of taxable goods, ITC available. In case of exempted goods, ITC not available. In case of exported goods, whether GST paid or not, option 1 or option 2, ITC available. So 9 lakhs plus 2 lakhs, so that will be 11 lakhs, ITC is available. 48, Mr. Prabhu, registered under GST in Mumbai, is in the business of trading of marble handicraft items domestically as also exporting the same. His annual turnover and input tax details are as follows. Turnover, taxable goods, exported goods, exempted goods, we have tax paid on inputs. Mr. Prabhu exported the goods under LUT without payment of IGST. Value of like goods domestically supplied by him is 60 lakhs. So he is asking us to calculate the refund of ITC. What will be the refund of ITC? Net ITC into zero rated divided by adjusted total turnover. Zero rated divided by adjusted total turnover. What is the net ITC here? Net ITC, if you see, taxable turnover we can take ITC, exports also we can take ITC, okay. Exports also we can take ITC, exempted we cannot take ITC. So therefore, in this case, 12 lakh 50 plus 5 lakh 50,000, that is 18 lakhs. So net ITC will be taken as 18 lakhs into zero rated. What is the zero rated turnover? 75 lakhs or 1.5 times the local supplies. 60 lakhs into 1.5. So that is 90 lakhs or 75 lakhs, whichever is lower. So 75 lakhs only will be taken, and denominator 125 plus 75, 200 plus 50, 250. So 18 lakhs into 75 divided by 250, that will be 5 lakh 40,000 will be taken, okay. But remember, when you take adjusted total turnover, so you should not take exempted. Why you should not take exempted? Because this net ITC is pertaining to only taxable supplies or exports. So therefore, in denominator we should not take exempted. So that is a mistake we do, and we end up with the answer, okay, be careful. So we should not take exempted here. What should be taken? Total 200, 125 plus 75, 200 should be taken. So 18 lakhs into 75 divided by 200, that will be 6 lakh 75,000 will be taken as the answer. Then 49, state which of the following statements are true or false. Zero rated supply means supply of any goods or service or both which attracts nil rate of tax. False. So 49 is, first one is false, okay. Then second, exempt supply means export of goods or services, so to SEZ, no, that is called as zero rated, that is also false. Then third, non-taxable supply means, so which are not leviable to tax under CGST Act, but leviable to IGST, no, it is not leviable to any GST. False. ITC may be available for making zero rated supply of exempted goods. Yes, actually it is exempted goods, we cannot take ITC, but if that exempted goods are exported or supplied to SEZ, we can take ITC. So therefore this statement is true. So false, 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 true, that is the answer. So option A is the correct answer. Then 50, in respect of a consignment supplied on 20th August, provisional assessment was resorted to by a person who files return on monthly basis. Provisional assessment was resorted, okay, on 20th August. The assessment was finalized on 20th November and the taxpayer became liable to pay the differential IGST of 10,000. The taxpayer paid this amount on 20th December. The number of days for which the taxpayer is liable to pay interest. So consignment is supplied on 20th August. For 20th August, what is the due date of payment of tax? 20th of September. We need to count from 21st September till the actual date of payment of tax, differential tax, that is 20th December. So therefore in September 10 days, October 31 days, November 30 days and December 20 days. So therefore 91 days we need to compute interest. So for 50 the answer is 91 days. Then 51, Shri Ram Seva Trust registered under GST is a charitable institution registered under 12 AB of Income Tax Act. It has organized a skill development program relating to persons over age of 65 years residing in a metro city in the month of April. It has received the following amounts under the program. Subscription fees for the program 50,000 rupees. So subscription fees 12 AB, it's a charitable institution, okay. Skill development relating to persons over 65 years residing in a metro city, so that will be taxable. If it is 65 years residing in rural area, then it would have been exempted. So in this case it is metro city, therefore it will be taxable. So 50,000, yes, and 1 lakh also will be taken. Then consideration for supply of goods 3 lakhs. So 3 lakhs plus 1 lakh plus 50,000, So that is 4,50,000. Besides, the trust has received a donation of 2 lakhs from Mehta Builders. Trust is entitled to use this donation for any purpose. Hanuman, accountant of Sri Ramtreva Trust, is not able to determine the taxability of the above amounts received under GST law. He seeks your expertise in determining the same. Determine the value of taxable supply of Ram Seva Trust. So this is what type of donation? This is unconditional donation. It is entitled to use the donation for any purpose, means it's an unconditional donation. So therefore the answer for this is 4,50,000 only. So 6,50,000 will not be taken, because this 2 lakhs is what? Unconditional donation. Unconditional donation not treated as consideration. So therefore only 3 lakhs, 1 lakh, 4,50,000 will be taken. Then next 52. Happy Singh is the lawful owner of a residential house situated in Chandigarh. The property has 4 floors constructed on it. Out of the 4 floors in this house, first and second floor are self-occupied. Third and fourth floor have been let out for residential purpose. Ratanjot Singh, who is a tenant on the third floor, has surrendered his tenancy rights to Parminder Singh for a tenancy premium of 5 lakhs on 1st June. Parminder Singh has paid the applicable stamp duty and registration charges on transfer of tenancy rights. So here Parminder Singh will pay a monthly rent of 50,000 to Happy Singh. Determine the value of supply. So who transferred the tenancy premium? So this Ratanjot Singh has transferred these tenancy rights to Parminder Singh for a tenancy premium of 5 lakhs. So therefore, what is taxable in the hands of Ratanjot Singh? 5 lakhs. Tenancy premium will always be taxable in the hands of Ratanjot Singh. Now Happy Singh is receiving rent. So he is residential property, and that residential property is given on rent to a residential purpose to this Parminder Singh for a monthly rent of 50,000 rupees. Here Parminder Singh is registered or not? Not given, means unregistered. So renting of residential property for residential purpose to an unregistered person is exempted. So therefore in this case Happy Singh nil and Ratanjot Singh will be 5 lakhs. What if that Parminder Singh is registered? Even then for Happy Singh it is nil, because Parminder Singh has to pay GST under RCM, because remember 4 R's. Renting of residential property for residential purpose to a registered person is covered under RCM. So the recipient has to pay GST under RCM. Then 53. Lucky Singh, a resident of Noida and an unregistered person UP working in a private firm, went to Himachal Pradesh for a family vacation via Delhi, Chandigarh, Himachal Pradesh in his own car. After entering Chandigarh, his car broke down due to some technical issue. He called On Roads, an emergency roadside car assistance company, to repair the car. The car was repaired by the staff of On Roads. On Roads does not have a policy to maintain a record of address of the persons so taking the car assistance service. The value of supply is 50,000. The bill was supposed to be generated online though through the server, but due to some technical issue it was not generated. What will be the time of place of supply? So generally in case of repairs in relation to goods, so for section 12, because both supplier and recipient are in India, section 12 of IGST Act general provisions. So general provisions B2B or B2C, we don't have the information about recipient. So B2C and recipient, location of recipient in the records of supplier also not available. So location of supplier will be taken. So where is On Roads registered? So On Roads an emergency car assistance company registered in Delhi. So therefore Delhi will be taken as the place of supply in this case. Location of supplier is taken as the place of supply in this case. Okay. Then next one 54. LexCorp Private Limited is a manufacturer of fruit juices registered under GST. It purchases plastic bottles and cardboards and send the same for affixing stickers on the plastic bottles and manufacturing boxes from cardboard to a registered job worker. Hammer Industries Private Limited. These raw materials are sent directly from the place of business of supplier to the premise of job worker LexCorp Private Limited. Booked input tax credit on purchase of such items. The following transaction took place in this regard. Now, from the date it is dispatched to the job worker, it should be returned back from the job worker within 1 year, and it can be extended for a further period of 1 year. Here we don't have any extension. Okay, here we don't have any extension because you can see. So assuming that there was no extension granted by the commissioner in terms of the proviso to section 143. So there is no extension granted, means only 1 year. Suppose if the goods are not brought back within 1 year from the date of dispatch to the job worker, then on that we need to pay tax along with interest, whatever ITC we have availed. So we should treat it as supplied. The goods are supplied and we need to pay tax along with GST. along with interest at 18%. Value of goods sent to job worker, input tax credit paid on such goods 6,000, date of purchase of goods by Lex Corporation, date of receipt of goods by Hammer Industries, date of goods received back from Hammer Industries. So here the goods are directly sent. The goods are directly sent from the place of business of supplier to the premise of job worker, which means the date of receipt by the job worker to the date of return by the job worker, 15/7/2021 to 12/7/2022 within 1 year. So we don't have to pay anything in this case. Second, 27/9/2021 to 13/10/2022 beyond 1 year. So on this 24,000 we need to pay tax. Then 25/12/2021 to 16/8/2023 beyond 1 year. Okay, so therefore on 96,000 also we need to pay tax. Then 25/1/2022 to 23/1/2023 within 1 year, so we don't have to pay any tax. 26/2/2022 to 28/2/2023 beyond 1 year, on 42,000 we need to pay. Just do the total of this, 24,000 plus 96,000 plus 42,000, that will be 1,62,000. Okay, so 1,62,000 plus interest at 18%. So option D will be taken as the answer in this case. Then next, 55. An appeal to the High Court can be filed under CGST Act in the following cases. So by a person agreed against the order of state or area bench, yes, they can go for appeal. By a person aggrieved against the order of national bench or regional bench, no, directly to Supreme Court. Here they are asking High Court. So in this case directly to Supreme Court. For matter involving substantial question of law, we can go to High Court. So for 55 it is 1 and 3, option B. Then 56. Reena Banerjee and Associates is engaged in retail business of selling mobile phones in the state of West Bengal. It has affected supplies to the customers in the state of Uttar Pradesh and Haryana. Its total turnover during the current financial year is 18 lakhs. Owing to low profit margins in the business, she has decided to shut down the business in the next financial year. Okay, and the proper officer has collected evidence of the interstate sales of mobile phone affected by Reena Banerjee. Now the proper officer wants to make the assessment as it was liable to registration but did not get itself registered under GST. You need to assess the proper officer by determining, so which of the assessment, best judgment assessment, in this case it is best judgment assessment. Best judgment assessment we have 62 and 63, it is 63 best judgment assessment, that is best judgment assessment with respect to unregistered persons. Okay, so option C is the answer. 57. Fury Limited India has received an order for supply of services amounting to $5 lakh from a US based client. Fury Limited India is unable to supply the entire services from India and asked NIC Incorporation Mexico to supply a part of the services to US client. So Fury Limited raised invoice for $5 lakh, but the US client paid $3 lakh and they paid 2 lakh to NIC. So actually we are required to provide service for $5 lakh. We appointed one person outside India, he provided services and we are also provided services, and the client, rather than giving 5 lakhs to us and then we remitting 2 lakhs to them, they gave 3 lakhs to us and they gave 2 lakhs to our outsourced person. Now in that case, what will be taken as the value of turnover, export turnover? It will be $5 lakh only. We have a CBIC circular. Provided on the $2 lakh we pay IGST under RCM, because for the $2 lakh for us it will be import of service. For the $2 lakh it will be treated as import of service from NIC Incorporation by Fury Limited. Then GST, that is export turnover, will be taken as $5 lakh even though the actual consideration received is $3 lakh. So in this case, so what will be the value of export of service? $5 lakh will be taken. Then 58. Sukamini traders registered in Maharashtra purchased machinery 2 years back worth rupees 2 crores and did not avail ITC at the time of purchase. After using the machinery for 2 years, it gave said machinery free of cost in the month of September to an unrelated person in Punjab. Is it first of all supply? Actually it is not a supplier. Why it is not a supply? Because see this, it did not avail ITC and it gave the machinery free of cost in the month of September to an unrelated person in Punjab. It is not a supply. Disposal of business asset on which ITC avail will not come. Related party transaction also will not come, not a supply. In the month of September, it also supplied taxable goods worth 50 lakhs to Royal Oil Corporation Limited in the territorial waters. The said territorial waters are located at a distance of 5 nautical miles from Maharashtra and 7 nautical miles from state of Kerala. What should be taken as the location of recipient or place of supply? Nearest coastal state. Which is the nearest coastal state? Maharashtra. What is the location of supplier? Maharashtra. So it's an intrastate supply chargeable to CGST, SGST. 50 lakhs into 9%, 4,50,000. CGST 4,50,000, SGST 4,50,000. That will be taken. So option A is the answer. IGST nil, because first one is not a supply. Then 59, which of the following service does not qualify as OIDR service? OIDR service means a service which is mediated through internet and it is automated, is known as a OIDR service. PDF document manually emailed. So even though it requires internet but it is not automated, so it's not a OIDR service. PDF document automatically downloaded from the site is a OIDR service. Online course consisting of pre-recorded videos and downloadable PDFs. So does not qualify or qualifies as OIDR service. Okay. Then next, stock photographs are available for automatic download, OIDR service. So only option A is the answer. Does not qualify as OIDR, A. Then 60, during access to any business premise under section 71. 71 provides the officer, empowers the officer to access the business premises, and that do not require any suppression of turnover or suppression of stock, etc. and all. Which of the following records can be inspected? All records which are required to be maintained under section 35, trial balance, financial accounts, cost audit report, income tax audit report, everything. All these records can be verified. Even further to this, records under section 35. Okay, so option D is the answer. 61, in which of the following cases can an importer claim abatement of duty under section 22 of Customs Act? Abatement of customs duty is reduction in customs duty payable. It is on account of damage or deterioration. Goods pilfered, section 13, not abatement. Then next, goods damaged by accident after unloading but before examination, no. If it is due to negligence, we will not get abatement. Goods destroyed by accident while being removed from the warehouse after clearance, we will not get any benefit. Goods damaged by accident, not due to negligence of the importer after unloading but before examination. So 4, only in case of 4, we will get the benefit of abatement. So for 61, option A. Which of the following statements are incorrect? Special exemption under section 25 of Customs Act is granted by issuing notification. General exemption is granted by issuing an order. Special exemption is required to be published in official gazette. So see the 62. First, special exemption is granted by issuing a notification. So no, it is wrong. It is by order. General exemption is by notification. Wrong. Special exemption is required to be published in official gazette. No, not required to be published. But general exemption is required to be published. So all these statements are incorrect. For 62, the answer is B, 1, 2, 3, 4. Because see, general exemption is by way of notification. Special exemption is by way of order. General exemption should be given in official gazette. Special exemption need not be given in official gazette. Okay. Then 63, ABC exported certain goods last year. The buyer has sent back those goods since the same were under warranty and require repairs. Which of the following conditions are to be satisfied by ABC to avail the exemption on goods re-imported for repairs? So we have updated notification for this, notification 45/2017. ABC Limited at the time of importation executes upon, yes, this is one of the condition. Goods must be re-exported within 6 months or 1 year. So if the time is extended from the date of exportation, so yes, this is also one of the condition. If the goods are not repaired, new goods are to be sent by ABC Limited within 6 months. No, this is not a condition. So for 63, it is 1 and 2. Then 64, XYZ Limited sent certain goods abroad for repairs. See, this one is exported. The buyer has sent back the goods for repairs. So actually notification 60/2018. Notification 60/2018. So goods are brought back for repairs or reprocessing, refurbishing, etc. and should be re-exported within 6 months plus 6 months. Okay, that is this. Whereas 64 is goods sent abroad for repairs. Notification 45/2017. So here what happened is that XYZ Limited sent certain goods abroad for repairs. XYZ Limited has been advised by their consultant that they will have to pay customs duty only on fair value of repairs, cost of materials used in the repairs, right and insurance both ways, correct. Provided they fulfill the following conditions. The reimportation is done within 3 years from the rate of export, it is extended within 5 years, yes, 3 plus 2. The exported and reimported goods are same, yes, that should also be fulfilled. The ownership should not have changed, so all three, option A is the answer. Then next one, which of the following duties are excluded while computing social welfare surcharge? Social welfare surcharge is only on basic customs duty, safeguard duty will not come, countervailing duty will not come, social welfare surcharge itself will not come, anti-dumping duty also will not come. Which of the following duties are excluded? All these are excluded here, okay, 1, 2, 3, 4. Because social welfare surcharge is only on basic customs duty. Then 66, which of the following privileges are granted to status holders as per Foreign Trade Policy 2015-20? Authorization and customs clearances may be granted on self-declaration basis. Yes, that is a benefit given to them. 2-star export house and above can permit export warehouses. Yes. Input output norms will be fixed on priority within 7 days by the norms committee. No, within 7 days is wrong, within 60 days. This is false. Exemption from furnishing bank guarantee, yes. So 1, 2 and 4. 1, 2 and 4. So option A is the answer for this. Then countervailing duty under section 9 of Customs Tariff Act, that is anti-subsidy duty, shall not be levied unless it is determined that subsidy relates to export performance. Yes. Subsidy relates to use of domestic goods over imported goods. Yes. Subsidy is conferred on all persons. No, subsidy is conferred on limited persons. When subsidy is conferred on all persons, there is no countervailing duty. Subsidy is conferred on limited persons. So 1 and 2 is only correct and the third one is false. So option D, 1 and 2 is the answer. Then anti-dumping duty is calculated as dumping margin or injury margin, whichever is lower, not whichever is higher. So whichever is lower. For 68 it is option B. Then 69, which of the following statement is valid under customs law? Imposition of countervailing duty and anti-dumping duty on article to compensate for the same situation of dumping, false, because these two are mutually exclusive. Anti-subsidy duty, countervailing duty under section 9 and anti-dumping duty are mutually exclusive. If one is coming, other will not come. Okay. So, and anti-dumping duty is only applicable in case of dumping. So the given statement is false. Imposition of countervailing duty on article for the reason that the same is exempt from duty borne by like article when meant for consumption in country of origin. So this is also false. Countervailing duty is not for that reason. Countervailing duty is because it enjoyed the subsidy. Imposition of anti-dumping duty on articles imported from member country of WTO on determination that import of such article materially retards the establishment of any industry in India. True. So we should prove that it affects the domestic industry. Then only anti-dumping duty can be levied. So only 3 is the answer. Then under the customs law, electric shaving machine is classifiable under the following: 8510 shavers and hair clippers, 8509 electromechanical domestic appliances. So shaving machine, electromechanical domestic appliances is a general heading, whereas shavers and hair clippers is specific heading. We have one rule which says that prefer specific over general. So we need to classify it under 8510. Which of the following statements are correct as per general rules of interpretation of import tariff? A durable wooden case specially shaped to contain a musical instrument and presented with the same shall follow the classification of such musical instrument. True. So 71, first one is true. And even I discussed in my class also violin box. Violin box can be used only to keep violin. So whatever is the rate applicable to violin, the same rate should be taken for violin box also. Packing materials presented with the goods therein shall be classified with the goods if they are of a kind normally used for packing such goods, provided such packing materials are clearly suitable for repetitive use. Okay. So actually it is false, because packing materials presented with the goods which are capable of repetitive use will not be classified along with the article. It will be classified separately. It will be classified separately. For this I gave an example of tins. cashew nut tins or plastic boxes, etc., can be used for others also. We need to see a separate heading for that. It should not be classified along with the product imported. The heading which provides a more specific description shall be preferred over general description, true. So therefore 1 and 3 is the correct answer, option A. Then 72, the transaction value of imported goods is not accepted for valuation purpose when the use of the imported goods by the buyer is subject to the restrictions imposed by the seller which substantially affect the value of the goods, true. We will not take transaction value when the exporter imposes some conditions or restrictions. Then the buyer and seller are not related. When they are not related, we will not take, we will take transaction value. Then price is not the sole consideration, true. If price is not sole consideration, then also transaction value not accepted. So 1 and 3, option A. 73, the relevant date for determination of rate of exchange. Rate of exchange, it is bill of entry date. It is not date of vessel leaves or examination, deposit of duty. It is date of presentation of bill of entry. Which of the following statement is or are correct for identical goods for valuation purposes? Identical goods are same in all respects, including physical characteristics, quality and reputation as the goods being valued, except for minor differences in appearance that do not, affect the value of the goods. Correct. It is correct, true. Identical goods can be produced in any country, correct. Identical goods are produced by the same person. So 1 second here, identical goods should be produced in the same country. So incorrect, but can be produced by same person. Identical goods, imported goods having same physical features and quality from the same country by the same producer preferably. So producer need not be the same. So produced by the same person who produce the goods being valued, where such goods are not available, goods produced by different person, correct. So which of the following are not correct for identical goods? Only two. So option C. For valuation purposes under Customs Act, which of the following transaction would be considered as having been made between related persons? A foreign company A Limited having a joint venture with Indian company B Limited in the name of AB Limited, an Indian company. A Limited holds 51% shareholding in AB Limited. The transaction between A Limited and AB Limited. So A Limited is having a joint venture with B Limited in the name of AB Limited. A Limited holds 51%. 51%, definitely they are treated as related. Control is there. A foreign company A Limited having a joint venture with Indian company in the name of ME Limited, and the transactions between A Limited and B Limited. So yes, there is a joint venture. So therefore, then also it will be related. A Incorporation in USA holding 4% of share capital, actually 5%. 4% in two companies will not make it related. So it is not related. So answer is 1 and 2. So option C. 76, for determining the CIF price of imported goods, certain additions have to be made to the value of imported goods. If cost of insurance is not ascertainable from the documents submitted before the customs authorities, then such amount is to be determined as follows. Insurance should be taken as 1.125% of FOB, where FOB value is not ascertainable. So second is correct, okay. And where FOB is not ascertainable, sum of FOB plus cost of transport 1.125% 3. Both 2 and 3 are correct. 2 or 3, option C. Then 77, certain goods were imported by air. The FOB value of the goods is 100. Cost of transport, loading, unloading and handling charges up to importation is 25. 125. And cost of insurance is 10. For the purpose of rule 10, which of the following shall be added to the value of imported goods? So cost of transport, loading and unloading and handling charges, cost of insurance 25 and 10. So that, once again, it is imported by air. When it is imported by air, what we need to do? FOB into 20% or 25, whichever is lower, to 20 should be taken. So therefore we need to take cost of transport as 20, insurance as 10. But insurance when ascertainable we will take actual. So option D is the correct answer. Then Which of the following statement is not correct in the context of valuation of imported goods? Buying commission is not included in the value of imported goods. Correct. Rate of exchange notified by CBIC on the date of presentation of bill of entry is to be considered in the case of imported goods. Correct. For imports by air, the cost of transport, loading and unloading cannot exceed 20%. Correct. Social welfare surcharge is leviable on basic customs duty, IGST. No, false. Incorrect. So, social welfare surcharge is only on basic customs duty. 79. In which of the following cases the refund under section 27 of Customs Act is credited to Consumer Welfare Fund? So, it will be credited to Consumer Welfare Fund if the importer proves that there is no unjust enrichment. So, it will not be credited to Consumer Welfare Fund, it will be given to the importer, where the goods are imported for non-personal use of an individual and he could not prove that there is no unjust enrichment. If he fails to prove that there is no unjust enrichment, so refund will not be given, it will be credited to Consumer Welfare Fund. But in case of duty drawback, no need to prove unjust enrichment. If the amount relates to duty paid in excess as evident in the bill of entry, then also no need to prove unjust enrichment. Then 80, which of the following statement is false? Anti-dumping duty is imposed when any article is exported from any country to India at more than its normal value. False. Actually at less than its normal value. So which of the following statement is false? A. Absorption of countervailing duty is said to have taken place if there is a decrease in export price of an article without any commensurate change in the resale price in India of such article imported from exporting country. True. Safeguard duty shall not be imposed on articles originating from developing country if the share of imports of that article from that country does not exceed. True. Central government may exempt notified quantity of any article when imported from any country from whole or part of safeguard duty. True. So with this we completed these 80 MCQs. So these are all the standard MCQs. So this last minute you need to revise this, and usually the questions will be of this type only, and case scenario also. Only thing, rather than seeing the information under that question, you need to check it in the paragraph. Okay. So this is a type of questions, and thank you and all the very best for your exams.